Good morning, trading world. It is February 15th, 2022, just after 8:31 a.m. and this is my pre-market outlook and technical analysis for day trading the SPY. The title for today's outlook is Rip Your Face Off Rally in Effect. That's right, we have a Rip Your Face Off rally in full effect. This is what I was looking for when I was referring to the analogy of the roller coaster ride. In terms of that sharp up or rally being just as vicious or even more vicious as the drops. There is a lot of geopolitical stuff going on, but to me, the chart always does a good job of lining up decision areas with news events. The Fed had an emergency meeting yesterday, and nothing was made clear from the meeting excerpts that were reported. All the more reason to stick to the charts. Big report coming in at 8:30, and actually it should have just hit, and that was the PPI that came out at 8:30, and that was just basically another way to measure inflation from the seller side. And I think it came in hotter than expected, so we are starting to get that pullback here based on that report. And that'll definitely play into the scenarios for today once I get to those later in the video. The thing that caught my attention this morning as I came in looking, we had bonds, we had rates, we had equities all going up this morning at the same time, which definitely means something is definitely wrong with this market. It is broken. And I don't expect that to continue through the day. Keep an eye on us entering back into a volatility box. I will show you what that looks like on the 4-hour chart. If we go back here and look, let me bring up some drawing aids so that I can point this out. But right back here, this is what we're going to consider a volatility box. And when we're in this volatility box, it basically turbocharges price action through that range, which means we could see a huge range in a short amount of time. If you can see the size of that bar, that right there is no joke. So this is what I mean when I say don't get caught up in the swings back and forth. It serves you best that if you can see this, I'm always talking about the major and minor channels. This is the 4-hour, so I have minor channels marked off on this chart, and I know it's busy. There's a lot of lines going on, but bear with me. These lines that I have drawn here are just the minor channels for the 4-hour chart. So it best suits you not to trade in the middle of this box. There is nothing good really comes from that, because you're going to get ate up from every different direction, whether you're long, whether you're short. It just does not work for the novice trying to trade in the middle of that box. So you're best served at being on the edge of the channel and trading from that side, short from this side of the channel, and long from this side of the channel for the moment. But remember, I'm not too crazy about holding long positions overnight. To me, right now, that is a no-no. The other thing about this, what's really good is selling longer term premium in here. But that's something for people with larger accounts. So it's not something that I really bring up often because not a lot of people can really afford to do that. So, but I definitely wanted to point out this volatility box and how fast we can move inside that box. And we had gotten down in here briefly and we've rocketed out, but don't worry, we will be back soon. We will find our way back down into that volatility box. All right, let's get to some of the key levels of today. Pardon me a moment while I bring those up. All right, here we are with the levels, the key levels of the day. Starting on the resistance side, we have Jack resistance at 446 through 447. And the Queen resistance, we have 448 through 451 area. And the King resistance, we have 452 through 454 area. And just on a market feel right now, I feel like there should be kind of an emphasis placed at this 456 to 458 area for some reason. I may want to hold on to that level for later on in the week or possibly tomorrow, but when things start moving the way they are, there's no telling where we could reach to on a daily basis. Back to the key levels on the support side, we have the Jack support at 444 through 443. We have the Queen support at 442 through 441 area, and the King support at the 437 through 435 area. Again, something that I want to stress, I do list the channels or the actual major channel we are in. And right now, with the volatility and climate that we are in, I try to lean more on the channels than the Jack, Queen, or Queen support or resistance level. Because when we start moving the way we're moving, we can slice through these resistance and support areas like butter. They don't mean much, especially the Jack and Queen. They may not mean much at all. So definitely try to lean and pay attention to where you are in the channel. That will go a long ways as to helping your trading account right now, keeping you from getting ate up in the back and forth swings. The main thesis for today is bullish, closing above 439.02 with a projected high possible target of 451 through 453. The alternate thesis for today is bearish, closing below 439.02 with a projected low of 440 through 439. The current minor channel we are in is 453 through 443. Again, these are the channels that I'm speaking more so about leaning on rather than the levels. Again, the minor channel high is 453 and the lower side of the channel is 443. The major channel being 453 all the way down to 425. Again, the major channel to lean on to the high side is 453. To the low side is 425. Try not to get ate up in the back and forth swing by executing as close as possible to these channel edges. All right. bear with me a moment while I bring up the scenarios of the day. All right, here we have our first scenario of the day, our most probable scenario, which happens to be a trend day up type structure. And what happens on a trend day up is that we usually find ourselves opening with a gap to the upside, and from the opening, or from the cash open, we find ourselves in a fade back toward the previous close. And this fade back toward the previous close, it's not going to feel good today because it's such a large range. So it may begin to feel like we're just free falling, but in fact we're just fading back toward support, which happens to be the previous close of 439.02, which is marked by this blue line on the chart. At some point during the morning, we should find support on or before the previous close, and this should spark a turnaround where we start to trend up for the morning, and that uptrend is going to feel powerful as well. And we're going to go up and find our midday chop area around either our queen or king resistance area. And once we get that midday chop moving sideways through the lunch hour, we begin the second half of the day with what may possibly be a head fake up to continue the trend of the morning, but at some point in time in the second half of the day, we'll begin to fade back toward the close. This scenario has a probability of about 37%. So this is a decent probability of the day. And again, I want to speak to how large the ranges are, because it is not going to feel like a trend up day if we begin to fade. But just hold tight as long as we don't close outside or below the previous close, which happens to be this 439.02. It still has great potential in being a trend up day type structure. All right, on to the next scenario. All right, the next scenario, which just happens to have a probability of about 36%, is our rounded reversal day type structure, or as I like to call it, a change day. We could get a continued rally toward the queen or king resistance area straight off of the cash open, and we'll probably reach our midday chop area of either the queen or king resistance area and go sideways for the midday. Two important keys to identifying this day is, one, there is no fade, or whatever the price action is, it basically continues at the cash open. The second important thing to notice about identifying this rounded reversal day is divergence. We should get real divergence in volume on your intraday charts. Maybe 2 to 3 bars into the day, you should notice divergence as price action builds or grows stronger in a direction. Volume should diverge from whatever that direction. So if you use something that watches bull and bearish volume, if we are going up, the amount of bullish volume should diverge or be trending in the opposite direction of price action. And the other thing is whatever indicator or internals, whatever it is that you watch, that should also begin to diverge from price action. So if we have price action going up here, your indicator should be going the opposite way of price action, even with the slightest of trends. But you should be able to notice that divergence from your indicator and price action. And it should become extremely pronounced during the midday chop area. Now, one of the other things that we spend the first part of the day identifying is because the second half of the rounded reversal day can reverse with just as much force as the beginning of the day. So if there was a very strong trend or very steep angle going up in the morning, we could have that very strong trend or same degree or angle coming down in the evening. So that's one of the things that's important or key on a rounded reversal day. And today I feel obligated to point out the vice versa scenario on the rounded reversal day, because we could truly get a day where we continue the down side of the rounded reversal day like this and find ourselves toward a support area below yesterday's close. And once we do that, we could find ourselves chopping sideways and then taking back off that way. This could also be the structure for the rounded reversal day today. This is the vice versa, or a lot of times you see I'll have vice versa. This is what I mean by vice versa, the opposite day. All right, let's bring up the last scenario. All right, the last scenario is our expansive range day type structure. And I must continue to stress that range days have many, many different variations. It is so hard to pin down a range day because there are so many different variations that could take place. A range day is basically where we set a boundary high, we set a boundary low, and normally we chop between those areas. Then we have the expansive range day, which we set a boundary high, we chop lower, we push the boundary higher than the previous boundary, and we chop lower or higher or vice versa. It's kind of important to push the vice versa scenario with the range day as well, because we could come out several different ways. Just because I have the arrows pointing down from the start doesn't mean it has to go that way. But I will acknowledge a key point in recognizing the range day again has to do with the opening, previous close. And here I begin with a downward or fade crossing below the previous close and closing below that and finding support, and then chopping higher and then creating a higher low and then chopping higher and then creating another higher low and chopping higher. that is one way that the expansive range day could unfold. However, there's always a different variation for the range day that could possibly take place. So you want to keep in mind we could have something that meets back up here and brings us down below the close at some point, the previous close, and get us to chopping back up this way. So that's a possible play for the range day. The key part to a range day, we talk about divergence all the time. I use it. It is a key component to what I do in identifying trends, but I don't speak about convergence enough. And convergence is where price action and your indicator are moving in harmony. And this is a key component to recognizing a range day, because usually what happens, we get price action and your indicator moving in harmony. So when you see that reversal or flip around on your indicator, it's usually happening in price action too. But we want to identify those convergence changes around key levels, so that you're just not in the middle of nowhere and getting chopped up. So that's a key thing to look for on range days. So those are the scenarios for today, and as always, it is very, very, very important. I can't stress it enough during these market conditions that you know and understand your risk, because in these swings, as fast as they can go back and forth, it is very possible that you lose everything that you have on the line as far as what you risk per position with the way that these swings will go back and forth. So it is very important that you understand and define your risk and be comfortable with that risk during these market conditions. Also, again, we have huge ranges. So if you want to make money and you want to step out into the storm, basically, there is no need to do or add position size or trade even your normal size, because you can make the money trading half the size, which is one way to eliminate some of the risk on a position basis. So please think about that. Again, always understand and know your risk. Profit will follow. Wishing you a successful trading day. Have a great one.